Welcome back to the show. Joining us now is Sky News business reporter Chris Kohler. Good morning to you, Chris. Now let's talk about the cash rate dropping to 1%. I tell you what, the RBA is running dangerously low on ammo.
Yes, it certainly is. A cash rate always gets the blood pumping, but two back-to-back rate cuts certainly does the same thing, especially when you consider that the cash rate had been on hold for the better part of 3 years at 1.5%, and all of a sudden Philip Lowe decides to give us both barrels in June and July. So certainly down to 1% now. The cut had been widely expected yesterday, with 85% chance priced in by the market as we headed into it. Basically, three big reasons for that. First of all, the economy just wasn't as strong as the RBA would like, particularly when it comes to inflation and unemployment. Second of all, cuts and hikes tend to come in multiples. There's very rarely just a one-and-done situation. So as soon as we saw that cut in June, people were pretty primed to see one happen again. And third, and probably most importantly, Philip Lowe, the governor, basically came out and said that he was going to do it. He said, keep an eye out for this space. Another cut is more likely than not. So certainly people were expecting it.
Look, the underlying message as well from the RBA, I don't think it's that underlying, it's kind of in flashing headlights now from Philip Lowe, but also calling on the government to do more. The language used is more structural changes and more infrastructure spending. The government is doing both of those things, but what is the RBA talking about beyond, you know, the longer-term big projects and the tax cuts we're seeing in the Parliament now?
Yeah, look, I asked Nikki Hutley from Deloitte Access Economics that just yesterday, and she said what the RBA really wants to see here is a whole lot of smaller infrastructure projects, whether it's road or rail, all over Australia, particularly in regional and rural Australia. She says these big projects like new airports, they're good, but they're not actually going to get the stimulation happening right now for the Australian economy. And to Pete's point before, this is a kind of a semi-panic move, I think, from the RBA, because we are getting down to bone on bone here. 1%, there's really no buffer left. So really, Philip Lowe is reaching here, trying to get some help riding the Australian economy.
Now, obviously, I'm no economist, but isn't the point here that people just aren't spending money? They're too choked by their own mortgage repayments and they're under too much financial pressure. They don't have the money to be able to go out and spend it. So is this going to make much of a difference?
Yeah, that's kind of the question right now is how a consumer is going to respond to this. And as you say, they have been concerned and cautious with their money lately. Savings rates are up and spending rates are down. Australia is incredibly household indebted right now. It's a huge amount of debt, particularly coming from the property market. So what banks decide to do with this cash rate, very, very important. And now, yesterday, all day through to the evening, we were hearing from the big four banks. And now, given that it's been 2 rate cuts in 2 months, we can start to look at, well, how much of the 50 basis points are the big banks passing on? And I can tell you that ANZ has now passed on 43 of the 50 basis points over the 2 months. Of course, they got themselves into a bit of trouble by only passing on 18 basis points back in June. Josh Frydenberg came down on them pretty hard for that. NAB has passed on 44 of the 50 basis points. Westpac between 40 and 50, depending on your loan type. And CBA between 44 and 50 basis points, again, depending on your loan type there. So the hope is that will get the blood pumping back through the economy a little bit, get people loosening their coin purses just a little bit.
Well, Chris, where are you at on this prediction for house price increases? You know, you see kind of a continuum of predictions here. Some saying, you know, there'll be an increase of 15%. Some say it'll be just a minor bump. Where do you see it?
Yeah, I've been talking to a lot of economists about this lately because mortgage, or I should say auction clearance rates have been just ever so slightly coming a bit better, above 60% most weekends when we do talk about it on Business Weekend. But also the most recent CoreLogic pricing figures show that it was only a tick lower around the combined capital cities in June, and Sydney and Melbourne starting to look just a little bit more positive. But as for the outlook, most economists say that we're not going to see anything like we saw with regard to the gains in those boom years. It's probably likely to be flat or a little bit positive for many years ahead. So I think basically everyone out there with a mortgage needs to prepare themselves for that. The big message here seems to be that now is a pretty good time to pick up the phone and hassle your lender, call a broker, make sure that you're on the best possible deal that you can be.
Chris, in the last couple of days, I've been hearing an awful lot about a term called quantitative easing.
Yes.
I don't understand it. Can you explain what it is and how that might come into play if these rate cuts continue to drop?
Yeah, essentially it's an emergency measure. It became kind of famous after the global financial crisis in the US, and it was also used in the European Central Bank. It's a measure where the central bank buys a whole lot of government bonds again and again and again. It effectively just floods the market with money. It's an emergency measure, and it's really something that only gets talked about when it's a bit of a kind of a dangerous period in the Australian economy. A lot of economists are talking about this as a possibility for Australia because as we sit now at 1%, economists are saying, well, the RBA is clearly not done here. Governor Philip Lowe has signalled that more rates are on the way. Whether we end up finishing it at 75 basis points or even 0.5%, then we have to start talking about these emergency measures like quantitative easing. Now, Philip Lowe knows that economists are talking about that, and he's in some ways kind of addressed it. But what he's saying is we hope that the government steps in here, to Laura's point, and helps us out before we have to get down to those emergency measures.
And Chris, we see the tax cuts this week. We had the Treasurer on the program yesterday. Once they pass the Senate, which will be on Thursday or early Friday, I'd say Thursday, if you put in your tax return, you'll get that $1,080. Millions of Australians will get that $1,080 as early as next week. How quickly can you see and how big will the stimulatory effect on the economy be?
You'd expect that would be pretty quick because it is kind of that sugar hit that we all talk about and hope for. Yeah. We'll see it pretty quickly in the data. We've got retail sales data coming out this Thursday. That's going to be monthly. We'll start to see it in things like NAB's cashless retail sales figures, business confidence and consumer confidence numbers that do come out regularly, and we'll be reporting on them here on Sky News. So hopefully we will see some sort of some action at the station there from consumers pretty soon after that tax return comes back in.